Hi guys, and welcome to this new video. I am Davide, one of the coaches at the Unger Academy. Today I want to speak about another very famous indicator for those who works in the markets. It's called the Relative Strength Index, also known as RSI. Why do I want to speak about this indicator? Well, because I think it's extremely useful to know how it is built. As usual, I do not want to just show you a curve under a chart, but I'd like to tell you how to calculate it step by step. Of course, the goal is to find new edges in the markets and to be profitable with our trading systems. After the theoretical explanation, in fact, we will see together a couple of approaches to understand what can be done with this number. Before starting, however, if you haven't already, I invite you to subscribe to this channel by clicking on the bell so that you can stay updated on the release of new videos. Now, let's take a look at the process of calculating this oscillator. First of all, I'd like to point out that, like the ADX, this oscillator was also made by Wilder Welles in the late 70s, and it was presented for the first time in the book called New Concepts in Technical Trading Systems. The first concept we need to build this oscillator is the concept of up and down close. Here we can see a classic chart with time bars. So, if the close of today's bar is higher than the close of yesterday's bar, we will have an up close. Here is the positive difference between two closes, and we will call this up close. The same could be said for the down close, that is, when the close of today's bar is lower than the close of yesterday's bar. This is an example of what can happen. Here it is. This is what we can call a down close. So let's define what these up closes are in an historical series. In the first case, as you can see, the close is lower than the close of the previous bar, so there is no up close. So in this case, the value is 0. 3.1 is the second value because today's close is higher than the close of the previous bar. Then we have a 0.3 and 0.5. Then we have 0 again because the level of the close is below the close of yesterday, of the previous day. 0 again, and at the end 11.1. We can do the same for the down closes. So we start with a 5.4. Then we have a 0, then another 0, 0 again, 3.3, 0.8, and at the end, in the last case, another 0. So let's make some considerations about these numbers. As you can see, there can never be a positive number for both the up close and the down close of the same bar, because obviously there can never be a close that is both greater and lower than the close of the previous bar. So we can only have either 0 or a positive number. Again, once the necessary values have been collected, we can add them together for the purpose of calculating a number that is called relative strength. This number is nothing more than the sum of the up closes divided by the sum of the down closes. The sum of the up closes, so the sum of the closes that are above the closes of the previous bar, is 15. The sum of the down closes is instead 9.5. In our case, since we are considering 7 bars, the relative strength is written as RS7 and is calculated by dividing 15 by 9.5, which makes 1.58. Now, this is not really the division of a sum, but rather the division of an average. In fact, we should do 15 divided by 7 divided by 9.5 divided by 7. However, it's pretty obvious that dividing both numerator and denominator by the same number, we end up with the same results. So we can simply consider the sum of the up closes divided by the sum of the down closes. Another observation, we are now going to build a simple moving average. In reality, the construction of the RS takes place through the exponential moving average. So the concept is slightly different, and that's what we find in Wilder Welles' book and in the platforms, so on multi-charts, TrackStation, etc. But I guarantee you that this difference really isn't that important. What is actually important is that you know where these numbers comes from, and it comes from an average of the closes. The relative strength could be described as the sum of the up closes divided by the sum of the down closes. So, summing up a little bit what we have found so far, for these 7 bars we got the sum of the up closes, the sum of the down closes, and the relative strength. Now, the relative strength index is an oscillator that fluctuates from 0 to 100, so its value can only range from 0 to 100. To calculate it, we need to transfer the relative strength concept on a scale that goes from 0 to 100. How we do it? Simply by using this formula, which is definitely very straightforward. Let's check it out. In our case, we have 100 minus 100 divided by 1 plus 1.58, and then 100 divided by about 2.5, that is 40. So we have a number that is below 40, and in fact 100 minus about 40 is equal to 61.2. But what does this 61.2 actually mean? Let's take a guess. Let's assume that our up closes are all null. What does it mean? If I have up closes that are all null, it means that all the closes were actually down closes. So none of the closes has ever been higher than the close of the previous bar. So if the up closes were all equal to 0, the relative strength would be equal to 0 because it would be 0 divided by a certain number. Let's see what happens when we set the RS equal to 0 in this formula. We get 100 minus 100 divided by 1 plus 0 equal to 100 minus 100. So the relative strength index is equal to 0. So 0 identifies a maximum oversold threshold because in this case we have 7 consecutive down closes. Conversely, in the opposite case, we see that the down closes are instead equal to 0. So what's going to happen in this case? I only have up closes and no down closes, so 7 up closes for 7 times in a row. So what is the RS in this case? Well, it is equal to a number divided by 0, and a number divided by 0 is equal to infinity. So we would have an infinite relative strength. Going back to the RSI, we have 100 divided by a huge number, which therefore is 0. So 100 minus 0 is equal to 100. And as you can see, we were able to put a concept of relative strength on a scale from 0 to 100. When we will analyze the trading system, we will identify 2 thresholds, the overbought and the oversold one. These 2 thresholds will be our entry levels. We will see that when the RSI is below a certain threshold, we are in an oversold situation, so the market is weak. On the other hand, when the RSI is above and exceeds a certain threshold, we are in an overbought situation. Finally, I'd like to show you the parameters recommended by Welles, so the most canonical ones. Now, Welles recommends considering 14-day time horizons, so considering 14 periods and using daily candlesticks. He also recommends using the closes, and why do I say that he recommends using the closes? Because if you think about it, there can actually be other ways to build the RSI. We use the concepts of up closes and down closes here, but we could also use opens, lows, highs, etc. I mean, Wallace told us something, but we could take the same concept and try a lot of different things. Okay guys, the first video dedicated to the RSI ends here. Next time we will see together some open code trading systems that are based on the idea of Wallace, both in terms of operation of the identification of the entry levels and of the use of the RSI as a filter. If you haven't done it yet, I invite you to subscribe to the channel and click on the bell in order to remain updated on the release of new videos. Finally, I'd like to remind you that in the description of this video you can find a link to a free webinar in which we give you an introduction on how to build trading systems and create well-diversified portfolios of automated strategies. This is done by following the method of the 4-time world trading champion Andrea Unger. Thank you for watching and goodbye. See you in the next videos.